6 money myths that hold you back. Are you being prevented from becoming financially prosperous? A false belief system about money can seriously affect both short and long-term fiscal worth. But there's a way out. Throw away these 6 money myths, and you'll be on the path to prosperity. Do you hold any of these common, erroneous beliefs? Myth number 1. If I get a raise that moves me into a higher tax bracket, I'll actually take home a smaller paycheck. Thankfully, this isn't true. Being moved into a higher tax bracket only increases the tax rate on the income you earned in that tax bracket. Here's how it works. Canada federal tax rates for 2016. Please see the tax bracket table below. So, if you earn $60,000, the first $45,282 is taxed at 15%. Your income earned between $45,283 and $60,000 is taxed at 20.5%. Myths number 2. Renting is analogous to throwing money in the garbage. Compare renting to other necessities of modern living. Do you regard the money you pay out on gasoline to be the same as throwing it away? How about what you spend on electricity? These expenses are both examples of consumables without lasting value that you consistently purchase. However, these things are required for daily living in our society. Rent falls under the same heading. Even homeowners have to throw away money on items like property taxes and mortgage interest, quite possibly more than you're using to pay your rent. In fact, for the first several years of most mortgages, you're essentially paying primarily interest with your payments. For example, on a 30-year, $150,000 mortgage at 7% interest, your first 5 years of payments would total approximately $60,000. Of that $60,000, you throw away approximately $51,000 on interest payments. Myth number 3. Higher price means higher quality. More expensive items are not always of greater quality. For example, generic drugs are generally regarded to be just as beneficial as their name brand alternatives. When determining an item's value, look beyond the price and examine the true value to you. Does that generic brand pain reliever help your aching back? Don't be so sure that paying extra is really getting you something extra. Spend your money wisely. Myths number 4. You need a lot of money to start investing. It's true that some brokerage companies require a minimum amount of money to open an account. However, there are also many online brokers now that have no investment requirements to open an account. You can get started immediately, if you want to. Myths number 5. Keeping a balance on my credit card will help my credit rating. One of the factors that go into a credit score is the percentage of available credit that's being utilized. So, you're better off without carrying a balance. That's not to say you shouldn't use it, just pay it off monthly. There's no benefit for you to pay interest to the credit card companies. Myth number 6. Home ownership is a guaranteed investment strategy. One only needs to look at what's been going on in the housing market the last couple of years to see that's not necessarily true. As with other investments, home ownership carries a risk that your investment may decrease in value. Although commonly reported data say that housing appreciates somewhere between the rate of inflation and 5% per year, this is not always true. In reality, your home can certainly lose value over time. Did you believe any of these financial myths before you read this article to avoid money myths? What's most important is that you're on the right track now. Continue educating yourself and always be open to learning more about money. It's never too late to get on the path to real wealth. Thanks for listening for Moses Dan's Finance Tips. If you enjoyed this finance tips, please share and comment. Don't forget to download the free investment planning report today.